Greetings, members one and all of the Salivation Nation. Silver is in a tricky situation, and I'm not just talking about the milk spots on this Type 2 Silver Eagle. Let's explore! Indeed, silver is struggling a bit to meet that psychological $24 level. There's some reasons for that, but there are some signs of a technical recovery, referencing an article here from Kitco. It's been the last few sessions we've seen it kind of hang out a bit, but the precious metal is heading into this tricky resistance zone. And essentially that area is around the $24 level. $24 an ounce is a psychological level, and that's just it. From technical stance, psychology really doesn't play that much of a role. But we can see resistance marked by the boundaries of psychology. And we're seeing what is going to be happening with the trend if there is some of these things continue as far as silver's movement up or down. And from a technical point of view, the price still has not made a higher low, higher high formation is what it's referred to as, which is a little bit confusing, but I guess it's like a stair-stepping sawtooth pattern if you look at it from a zoomed out situation. In other words, it can't call this trend a change, but the signs are good. Another feature would be the 200-day simple moving average, which is another line that you see that is averaged out in technical analysis where things go. It's kind of plateaued from there. And the price manages to break that level. It would also provide another clue that the market is looking to move back into this uptrend. But beyond that, there's another red line which provides definite volume point of control. And it's been a big congestion area for the price. As we've seen, in fact, it hovered around that line back in July for quite a while, and that was in the $26 range. It's not a confirmed trend change, but the signs are looking good from a technical standpoint, according to this opinion on Kitco. There is every chance the price could go back and retest the channel structure. If it does, a break of the $24 an ounce area is key, and it would make a higher low, higher high. Then the rest of the resistant levels will be in focus. So from a technical standpoint, it looks good. And earlier, yesterday, we did see silver kind of make this little quick, short jump, this sort of explosive move to that $24 level. They've rallied significantly during the course of the trading session on Tuesday to clear the 50-day exponential moving average and even break above the $24 level. And that is the psychological level that was referred to earlier there. They've rallied significantly during the course of the trading session to mark above that 50-day exponential moving average and even clear that $24 level momentarily. And of course, it's a very positive turn of events, and it does suggest that we are likely to see even more bullish behavior. With that being said, the 200-day EMA sits just above, and it is thought that this is something that you can have to pay a certain amount of attention to as well. And there could be a scenario where this is a market that continues to see a lot of inflow. And with the US dollar falling a bit, that will continue to help silver. It might just be these steps that we're seeing that is enhanced by the technical analysis here that leave us in this precarious situation. Kind of tricky. In other words, really could go either way, even though most of these analysts are a bit bullish, slightly bullish. We'll see a little bit more of that when I talk about the next story here. But breaking above the $24 level is a very strong sign, but a little bit of a pullback should not be a huge surprise. It's interesting to note that we have broken above a significant break point out of the $24 level that kicked off the most recent fractal. And I guess that's kind of the measurement, a way to kind of see where the pattern that we're find out with these things with technical analysis. If they get above the 200-day EMA, it's likely that this market goes much higher, perhaps reaching into the much higher levels via a significant long-term bullish trend. The next couple of days could give us answers as to whether or not that could happen, but clearly the buyer is in control overall. And of course, they're probably talking about the ETFs, because how much control do we have buying the physical when the premiums are starting to rise due to some of what I talked about in prior videos? But nonetheless, we are seeing silver kind of move in a direction that has been down in recent weeks. And every time we see the prices move up and stay up from day to day, people are more bullish. Naturally, that tends to be the case. But nonetheless, there's an article here from ETFtrends.com that talks about silver price going down, but keeping pace with the S&P 500. Not very often do you see silver compared with the S&P. Usually we see gold compared to it. But this article says that silver prices are tethered to gold's performance in the current market environment. But looking at its 3-year chart, the precious metal is actually keeping pace with the S&P 500. The apex of the pandemic's negative effects on the market in 2020 saw silver prices skyrocket to close to 90% before coming back down to earth in 2021. Meanwhile, the S&P 500 has made its V-shaped recovery and extended well beyond that en route to its almost 60% gain. However, inflation has been a continuous topic of discussion in the capital markets, which is causing investors to fret over economic growth or lack thereof. Talks of stagflation are now circulating, which relates to an economic landscape marked by high interest rates and low economic growth. This could make the perfect backdrop for safe haven assets like silver. Moreover, silver prices should bounce back. It can provide an ideal hedge against inflationary pressures. And likely it's going to take that in order for it to occur, because again, the reason why silver is down, and I've talked about this before, is because of low industrial demand. And that is silver being priced as a commodity, which separates itself from gold, which is mostly priced as a hedge. And that's why we see the ratio so high. In fact, that very well could have been why we saw the ratio go up to over 100 back last year in 2020. If we have a weak economy coupled with the drive towards needing and using more silver, you're going to have a base metal mine shutting down that produced silver as a byproduct. Just as an enormous demand for silver comes to the fore, said James Anderson, CEO and chairman of Guanajuato Silver Company. I wonder if that's the same James Anderson that I know that has been associated with SD Bullion. In that environment, you could easily see silver go to the $40 price range, but it is more likely we will see silver at $30 before it hits $40. And by the way, the $30 level is what I have predicted silver is going to be by the end of 2021. Now, that's my personal prediction. I'm actually sticking with it, even with the prices trending kind of downwards here. But we'll see. As of the recording of this video, silver is actually sitting at about $23.71. But by the time you see this video, who knows where silver is going to go. But nonetheless, still under that $24 level. But James does make a good point about if you have a weak economy coupled with a drive towards needing and using more silver, you're going to have base metal mines shutting down that produce silver as a byproduct. It would have to be pretty weak, substantially weak to get to that point, I feel. I don't think that necessarily, unless there's a crash and some other outbreak or whatever in these mining companies, they're just going to shut down. My guess is they have a lot. There's going to be still enough demand for some of these base metals, but that certainly is something that could happen long term. But nonetheless, one thing is that he is saying that he can see it hitting $40 halfway through next year. I don't know. I'm not that bullish on silver next year. I think that a lot of things could happen. I could see where they could hit $40 next year, but I think there's a chance we could see silver at $30 before this year ends, though, and I don't think it'll be because of base metal mines shutting down. But nonetheless, that is kind of where that sits. Very interesting topic, though, and that's kind of where we are at. Silver is in a kind of tricky situation. That $24 level has been tested yesterday, and by the way, I'm recording this a day before, and the night before, just so you know. But nonetheless, there it is. Pretty interesting stuff indeed. Silver is an amazing metal to kind of watch and keep track of. But as you know, as is always the case, the fundamentals of silver remain intact, and that is as a hedge against economic instability over the long course of time, utilizing the tactics of buying that preserve your wealth. In other words, you buy more silver when the price is low, less of it when the price goes way up, and that kind of dollar cost averaging is one that will preserve your wealth, and that is really what it's about. That's what it is about with regards to stacking physical silver. You could probably do the same thing with ETFs, but again, in the ETF world, we don't know, it's not backed, or it's not really truly tested by the silver it's backed behind. Even PSLV, because PSLV is known to be 100% backed by physical silver, but how many people are going to actually put that to the test and make that work? What kind of premiums, what kind of shipping would be involved in that? What are the minimums? Is it 1,000 ounces? There's all kinds of different factors in there. Probably just would not be practical to cash it out for silver. You people get into those ETFs in order to play in that market, to hedge themselves in that space. And when you hedge, you cash out literally into cash. For those of us who stack silver, well, we are completely divorcing ourselves from the financial institutions with the dollars that are spent on these physical metals. Those dollars that are spent on those physical metals translate into money that is in your possession, that is not affected by the markets per se until you sell. And sometimes you have to sell at a loss, and especially if the premiums are really high and or the price goes down at the time you sell, depending on what your average is for the price of the silver that you sold. Nonetheless, there it is. There's always a risk, really, in anything you do in life in general, and even the most stable of assets such as gold and silver. There's risk involved in those as well. No one understands that risk before making any purchases, as is always the case. But nonetheless, I believe in stacking for the long haul, and I'm not a person that sells unless I need to sell. And thankfully, I think it's very wise, by the way, especially if you're stacking physical silver, to have an appreciable amount of cash on hand, especially in the case of a situation where there's a bank run. Actually have that cash in your possession so that you don't have to sell your metals if you run into some trouble, an emergency expense of some sort. And it's very tough to do because a lot of people think, well, shoot, I need to protect myself against the decreasing value of the dollar. But you have to think long term in that regard, which is why if you run into an emergency short term, it doesn't matter about the long term. You need that money now. So that's why it's good to have some cash on hand for this kind of emergency situations. Cash and silver, and of course gold as well. So there you have it. Let me know what your thoughts are on this video. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and, oh, look, a Libertad stack.